been a rough few months for the utilities cohort. The whole group has been slammed for one very simple reason. Utilities are high-yielding bond market equivalent stocks. So when we expect the Federal Reserve to raise interest rates, something that's likely to happen maybe next month, these high yielders suddenly become a lot less appetizing and money pours out of the sector. But the thing about stocks is that they get cheaper as they go down, and that goes double for stocks with big dividends. Take American Electric Power, AEP, a company that owns the largest power transmission network in the country, along with a major power generation portfolio serving over 5 million customers in 11 states. Also happens to be a stock that we own for my charitable trust. You follow along at actionalertsplus.com. Now, we started buying AEP back in January, and the stock ran from 58 at the beginning of the year all the way up to 71 at its peak in early July when interest rates troughed. Remember, in the first half, the utilities were red hot as investors desperately searched for yield. Since then, now AEP has fallen down below 63. Again, the pullback has nothing to do with the business. American Electric Power just reported a nice top and bottom line beat on Tuesday, and management even raised their full-year earnings guidance. On the same day, the company held an analyst meeting where they outlined their plan to transform into more of a low-risk regulated utility with faster earnings growth. Terrific story. But this is a dividend stock with a 3.75% yield, and the people who owned it for that have been selling the darn thing as bonds become more attractive. The yield on 10-year treasuries has increased by about 40 basis points over the last 4 months. In the end, though, I think the fundamentals here matter, although you might need to be patient before that happens. So let's take a closer look with Nick Akins. He's the chairman and CEO of American Electric Power. Learn more about how his company's doing and where it's headed. Mr. Akins, welcome to Mad Money in person. Good to see you, Nick. Have a seat.
Jim.
Thank you.
Good to see you.
All right, Nick, I thought this is a little snippet from your analyst meeting. It's terrific. Everybody can get it online. It's all there, including the deck. So as I lead up, this is the story of AEP, the new story of AEP, the premier regulated energy company. It's around higher growth, higher dividends, more regulated, and more certainty. So from a shareholder perspective, it should be just an excellent story for investment going forward. Isn't that too good to be true? How can that be?
It's not too good to be true.
Tell me why.
We've been in a several-year process of transforming this company to one that's fully regulated so we can provide consistency, quality earnings, and obviously dividends as well to our shareholders. And to reform the business in that perspective has really worked out for us. And now we're fully regulated. And we've raised the growth profile of the company going forward. So it's going to work out great.
But there was one point in my career I remember I wanted all these utilities. Well, everyone told me you wanted go-go utilities that did great. They merchanted power and they went around the universe trying to sell power. That model did not work, did it?
Right. And we're about long-term consistency for our shareholders. And that's what they expect, obviously. So we want to make sure the business actually focuses on that. And we have the added benefit of a huge transmission and infrastructure play that makes a lot of sense.
Now, how can you assure growth at a time that is so uncertain in this country?
Because we invest our capital. We have a $17.3 billion in capital that we're going to be investing over the next 3 years in infrastructure, and we recover through the regulated framework with a recovery rate and an ROE that's associated with that. So we actually produce earnings from that perspective.
So return on equity has always been good for transmission.
Yes, yes.
Just consistently, right?
Yeah, transmission.
In the country's history.
Yes, and we have the largest transmission system in the country, so the return on equities for transmission are usually higher than the state-approved ROEs because the Federal Energy Regulatory Commission, rightfully so, wants to encourage transmission to be built so that we can optimize resources, renewables, and so forth. So we're a part of that play.
Now, the other day I was watching my colleague Carl Contini is interviewing Elon Musk tomorrow. And I was watching, he's got solar panels. My wife was saying, wow, those are solar panels. I can see it putting on it because they look like shingles. And I was thinking, well, what happens if everybody did that, Nick? What happens if everybody put shingles on and every power company had to take the power from individual houses? I mean, to me, the grid would fall apart. Is that, we're not ready for that.
Yeah, there's a huge challenge associated with that because the more distributed generation like that you have, we need to be able to control it and manage the grid itself. Well, a part of the growth strategy of AEP is around infrastructure to support all these renewable resources being added. So it's not only the infrastructure of transmission and block and tackle type of investments, but it's also in terms of information flow, in terms of new systems, new technologies that are being deployed so that these systems can be managed. So obviously controllability is key there.
Now, I know being a utility company, you have to be neutral. I mean, you're regulated by a lot of different places. But when I look at the candidates, one candidate is clearly pro-coal. Okay, he's pro-coal. He says that, Donald Trump. Another one, I think, may be more anti-coal than President Obama. Not clear, but it seems like it. A company like American Electric Power, which has gotten out of a lot of coal, which has reduced its carbon footprint dramatically. Dramatically. Is that a defense against someone who might say, listen, I don't want any more coal?
I think we're doing exactly what our customers expect us to do, moving toward a cleaner energy environment. And for us, no matter who's elected, we're a long-term business, and we plan to be around for a long time. We manage between both parties all the time, and that's something I think that if as long as we're staying focused on the customer and the expectations there, then we'll be fine. And we've had a huge transition going on, and we'll continue that transition toward cleaner energy.
Last question. I follow nat gas really closely, and I see that suddenly Mexico's got a shortage of nat gas. We're sending our nat gas down there. I see that Cheniere, that plant that we've been monitoring since the show began, now they're starting to ship nat gas overseas. Is there ever a chance that we have what happened to Australia, where they ended up shipping so much that they ran out?
I think one of the clear issues that the U.S. needs to consider is the pipeline capability across our system. So if we're going to depend upon that particular fuel as a backup supply for intermittent resources in the future, we had better have the natural gas supplies and the accommodating infrastructure to allow us to depend on that particular fuel. So it's clear that the more we ship overseas or more that ship to other countries, we need to make sure we take care of the U.S. first.
Yeah, and I think people should be thinking about that, because they may be playing with literal fire. Okay, that's Nick Akins. He's Chairman, President, and CEO of American Electric Power, AEP. Chapel Trust owns it. It's stock that held up today. Maybe that's saying something. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.